Morning, everybody. Hi. I'm just going to give you a quick rundown about what's going on, current events, etc. Quite interesting. I heard Adrian talking about the VIX. Stocks actually have recovered quite quickly from the opening this morning. We were due down sort of 15, 20. I think the FTSE is now up 30. So, there's a bit more optimism this morning. Last week was a bit of a tough week for stocks, tough week for markets, really. I'm actually surprised the euro didn't take more of a tank. Obviously, it's pretty weak this morning. What are we, 130.20 at the moment? You'd think on the back of... morning, Jeffrey. Hi, Sarah. Good morning. Hi, Ranjit. Nice for you to acknowledge me. Thank you. So it was a tough week, and I have to say, I think the reasons why the equities are slightly firm is because there's not so much talk about Spain, but there's some pretty damning articles in the FT, in the economic finance and economic section of The Economist. The reason why I mention this is you don't have to read up about all this stuff, but really the focus on Spain is quite justified, and it's a bit of a lightning rod. Whenever there's a problem anywhere in the globe, you get this sort of revisiting of the woes in the likes of Spain and Italy. We dealt with Greece, Portugal and Ireland, and I think it's not going to go away, I'm afraid. Hi, David. Hi, good morning to you. Morning, everybody. And I think the problem with it is that this is such a long-term solution, if I could call it that. And I think you're going to continue to have this for the next couple of years. I can't see any of this being resolved quickly. I think it's likely at some stage, certainly according to Citibank, that before the year ends, Spain is going to need some sort of assistance. There are lots of sort of rumours that a lot of Spanish banks are not in good shape at all, that they haven't acknowledged a lot of their debts, etc., their bad debts, and as a result, that's the situation is reflecting badly on the sovereign debts. That's the Spanish bonds, where the yield, which is inversely proportional to the price. So when the price goes down, i.e. people selling bonds, the yield goes up. It means it's costing Spain more money to finance its debt. Why is that a bad thing? Well, same thing with your mortgage. If someone puts your mortgage up from 4% to 6%, you know exactly what it means on your monthly repayments. It's the same thing for a country. It's going to cost them a lot more. And really, anything above 7% is unsustainable, which would cause Spain definitely to seek help from the Eurozone and or the IMF. They're calling this a sugar rush. We've had a lot of money thrown at things. This week's quite an important week, really. Let me just open up a browser. Just open up our calendar. The sugar rush, I refer to the way that the Eurozone, through what's called the long-term refinancing operations, or LTROs, from December and February, where they provided massive amounts of liquidity to the markets through this refinancing operation, over €1 trillion. We've got the quantitative easing in the States. There's this raging debate, will they, won't they increase or extend their quantitative easing in the States. And also there's talk this week, and that's focusing on our own situation here in the UK, with our minutes from the MPC coming out this week. So for the time being, markets sort of are on hold, a little bit of a recovery in equities. I am surprised that the euro didn't shank more last week, but you can definitely see where the trend is at the moment on the daily charts. Of course, daily charts on both euro, looking at the equities. One thing that is quite interesting, I was looking at some charts earlier on this morning on the weekly. Let me just quickly show you this. Let's go to, this is the FTSE. Just going to show you a weekly chart here. Okay, let's just take this one. This is the FTSE daily, but I'm not actually going to show you a weekly chart. You can see here that the FTSE turned some time ago, back at the towards the end of March. But if you actually look at the S&Ps, let me see if I can get that index. That's the classic, the one I wanted, SPX. There's the one. Okay, this is the S&P. That's actually the cash market. But if I show you the futures market, which is reflecting more directly what's going on, you can see here that the actual weekly market, let me just refresh this, and you can see that we are starting to turn. And this weekly market, you can see we've had a run up all the way really just before the new year, and I think it's likely that this market could turn and follow the FTSE, the DAX, etc. down. And this is a tough time for equities. Morning, David. Hi, Bill. I will ask Adrian to look at those stocks for you, Bill, later on if he's got time. So you can see what's happening in the markets. As I say, the longer-term outlook does not look good. Statistically or seasonally at this time of year, it becomes more difficult for equities. So come really the end of April, beginning of May, you'll have heard about the sell in May and go away. It is just more tougher for stocks at this particular time. So things don't bode particularly well, notwithstanding the fact that the markets are a little bit steadier first thing this morning. So all in all, positive numbers across the board, slight negative numbers expected from these German index, these economic surveys, etc. Other than that, as I say, good luck with your trading. Thanks for listening.